Hello, viewers. You are welcome to today's episode. Usually, what we do is uh, carry out weekly analysis. We call it top-down analysis. All right, because this will help us to know the opportunity that is in the market, for us to know the direction of trend, for us to know how we are supposed to plan our trades. All right, so today we are going to be uh, doing top-down analysis on all the major pairs. All right, so before we start, if there's any pair that you want us to, uh, that we want us to help, analyze before we close uh, this section, please, you can leave it at the comment section so that we help you to analyze it. All right, so that we just do the analysis fast. Okay, so my name is Sunday, the host, and you are welcome to our channel Against FX. And if you have not subscribed to my channel, please do subscribe. It's very important. All right. Do subscribe. All right. Do subscribe because it will help in our algorithm so that uh, our materials can go around. All right. It's very important that you help us. You subscribe and you also share so that others can see. What we do, we trade forex. And as a matter of fact, if you want to learn forex, we render such uh, services. Will help you to, will teach you how to trade forex. Forex is something that anybody can do, provided you are serious and you are ready to learn. All right, so it's like that. Like I said, my name is Sunday, the host, and you are welcome to Against FX. Now, before we begin today's analysis, I will remind you guys that it's very important for us to, on the fundamental aspect, all we need to do is to go to forexfactory.com. Why do you have to go to forexfactory.com? You go to forexfactory.com to check the news that are already slated for, you see, the dates, the time, the currency pair, and the impact. The impact you see here is what will the news, the impact of the news, all right? At what degree will the news, all right, have influence on that particular pairs. All right. So on Mondays, you can see there is no news at all. So it's just a free day. Beginning from Tuesday, you see all from Tuesdays down to Friday, is fully packed with news. USD, AUD, Australian dollar is Australian dollar, Canadian dollar, like that. The JPY, the CNY, just like that. So it depends on the type of currency pairs that you trade. So you have to always check. Forexfactory.com is a calendar that will help you know when the news of a particular country, based on the currency country you trade, you know when the news will be released. So you have to know and know how impactful the news will be. All these things that you see on red envelope like this, they all have high impact. So I use filter. What I did, I use filter. I only check these high impactful news. If you put this, if you check this and all these ones, they apply filters. You see both this one low impact. When you see a yellow envelope like this, they are low impact. If you see the one that is orange, as you can see, you see medium impact. Then if you see red, this is high impact. So what I do is I just use a filter, remove this, remove this, remove this. I only leave the high impact one. As a matter of fact, just because of this section, that is why I even leave all these ones based on the currency that I trade. Let me tell you, as a trader, as a forex trader, you need to specialize. What do I mean by that? You don't need to trade all pairs. One pair or two is enough. One or two pairs is enough so that you won't lose track. Because at the end of the day, when you have two, then you'll be able to study them. And as a matter of fact, most people trade just one. They focus on one pair. And that will may help you to be focused. All right? As a matter of fact, if you are a beginner or you are just coming up, you don't need to trade more than one pair. Just look for a pair that resonates with your trading style, study that pair, and stick to that pair. So what I do, even all these ones, I will remove them, leaving only the currency pair that I trade. That is what I do. All right, so that it will so that it will even be clean. You understand? Apply filters just for this. I'll just leave everything like this. So for fundamental analysis, you need to always use this. This is not the only calendar. All right, Forex Factory is not the only calendar, but this one is widely used and is reliable. So forexfactory.com, you will see this. Go to calendar, you will see all the news that are ahead for the week. All right. So that being said, do well to also visit our website againstfx.com. There you will see what we offer. And like I said, send us a mail so that we can train you. And we'll have lot of materials here that can kick you start so that before you even enroll with us, so that we can teach you for you to practice with, all right? For you to practice with, we have material free of charge. Do visit our website, all right? It's very, very important you do that if you want to take trading seriously. You need somebody that will train you. All right? Don't suffer what we suffered when we were coming up as a trader. You need somebody who is already in the system that will help you, that will guide you. All right? So that being said, let us start with our top-down analysis. The first on the list is what is Aussie, that is gold USD. All right, is gold USD. Guys, I just want to say something. Trading is very, very interesting. I'm telling you. But if you are finding it difficult, that means you are still doing the wrong thing. And until that is corrected, you will always be facing stress, analysis paralysis. It can be so deadly when you were battling with knowing how to trade. We all suffered all these things, like I said. That is why some of us who suffered and were able to find our feet and we now know what we are doing, we are now here to say, okay, come to us, we will train you. You don't need to come to our location, no matter where you are in the world. You sit in the comfort of your home. We train you online. We'll be having section with you. As a matter of fact, we have students that we are coaching right here. You can go to our YouTube and you will see. And some have already registered with us that we want to kickstart next week. So next month, first of August. So you can do well to join the badge. All right. So don't join the badge. 1st of August, we are starting a new class because we don't want this video right by we'll now say, okay, join this one that are already learning. They will now bring us back. No, that's why we do it badge by badge. So on the 1st of August, we are starting another batch. We start from the scratch. We'll teach you trading and you will know it. That is just it. It's not going to be a smooth journey, but be sure that at the end of the day, you'll be able to find your feet. You just take it as maybe it's the only source of your income, or you take it as, okay, my side hustle. All right? You'll be using that, all right, as your another source of income. All right, so that is how it is, guys. So before we start, I will remind us that we are doing top-down analysis. And when we say top-down analysis, we are actually starting our analysis from the higher time frame. So we'll start from daily, all right? Daily. And when you look at what is here, you discover that this is the leg that constituted all these ones. All right. And this push to the upside, pull back, you now see this guy here did not take out this high. It means that it has to come down to clear this level. That is the first thing that should come to our mind. This push to the upside, it created a high. It pushed down, all right? Then the next push should be to clear this high. Because why? This is a weak high. This is a strong low. Strong low, weak high. Is that clear? Now, you should be expecting that this guy should create another high. But what now happened? He stopped here. He stopped here. All right? He stopped here, so he did not create a high. We will now say fail to create. We now say fail to create. And anytime there is a level that failed to create, is going to be used as, sorry guys, this down one, sorry. This level failed to create a high. This guy here failed to create a high. He stopped shy here. He stopped shy here. So he failed to create. And anytime we see fail to create, once we see fail to create, that means it's going to be used as a liquidity. And that is exactly what happened. He pushed to the upside. This guy has done his job. He cleared this high. Then this guy, this is a retracement. All right? It's a retracement. That means this guy failed to push and clear this level. He failed. But if you look at the direction of the trend, we are going higher. All right? So we trade from the strong low to take out the weak high. So this guy he has done his job by clearing this high. He created another new high. Then this retracement did not take out this low. That means that is the order flow. So after he found support here, okay, if you want to use another confluence, all right, from low to high, he actually entered what we call a discount level. 50 below is discount, 50 above is what? Premium. By now, you should understand what we are saying if you have been following me. So this guy here is supposed to go up, clearing this high, but he failed. And that is why, as this guy now started pushing to the downside, he needs to use here as a liquidity. And that actually happened. So any level that failed to create a high, if a level fails to create a high, goes by the order flow, if it failed to do its job, that level will be used as a liquidity. This guy failed to create another high. He's supposed to break above this place to create another high, but he failed. So it did not do its job. And at the end of the day, when this push was coming down, he cleared this place. He now used this place as a liquidity. Now this guy came and he created a low. I hope we are understanding it. It has created a low. Now we now see price push to the upside. It pull back. Then there is a break of structure to the upside. What happens? Internal structure shift. Market shift has happened. So that is why we are now experiencing a push to the upside, a push to the upside. All right? We see push to the upside like this, like this. Then price started going to the upside. But when you look at something, you discover that there is what? A resistance here. There is what? A resistance here. We have a resistance here. You have a resistance here. All right? Price got here, it drops. As a matter of fact, when this guy went up, there was a rejection here and price closed here. This is a week, but this is where price actually closed. From that moment, anytime price, you see, got here, came back, it got here, it drops, it got here, it drops, it got here, and it's dropping. You see? So from the uh, higher time frame perspective, the current trend here now, the current trend here now is bullish, but we have a resistance here. We have a case here because there's a resistance that price is struggling to break above. Anytime price gets here, it drops. Anytime price gets here, it drops. We have 1, 2, 3. All right. Now, once this retracement ends, all right, once this retracement ends, don't forget, if you look at this point, you discover that there is what we call support here as well. This is how to analyze. You know, I must tell you guys that you cannot learn everything because as we are carrying out our analysis like that. You can't learn anything. You have to let somebody teach you. That is the truth. And the sad news is that it's not free. No matter, like we charge this small money, but it's not free. Nobody will teach you free of charge. It's not possible because we all paid. All right. And after we even paid, we could not even get anything. We have to learn. We have to still struggle to learn by ourselves in a very hard way. All right. In a very hard way. All right. So we have support here, we have a resistance. So while price came here, it bounced. It came here, it bounced again, and it's coming. So if it gets here and it bounces, let's see whether, if it gets here and it bounces, let's see whether it will now eventually break this resistance. So if it breaks this resistance level, then it will come back to retest the high, then we'll continue pushing to the upside. This is what this is the higher time frame perspective. But now we now need to scale down. All right, let's scale down to 4 hours. That is why it is called top-down analysis, so that you take advantage of the current trend. The current trend. Now, when you look at it very well, you discover that what we need is, because if you look at it, this point here, the origin of this point, terminates here, like this, like this, like this. It created a high. This is the higher time frame swing. Those things you must know, that this is a higher time frame swing from down to this point. And after that, you see that this is the pullback. And the pullback ends here. All right. When it got here, what happened? There's another push that ends here. So all those things you need to understand how it flows so that you know where to stand and wait for the market. All right. So as it stands now, we need to now concentrate on this leg. Let's concentrate on this leg. All right, let's concentrate on this leg. This is top-down analysis, guys. So you need to understand. If I'm doing it alone, I would in fact, as a matter of fact, if I'm doing analysis, it doesn't take me 5 minutes. 5, 10 minutes, I'm done. I'll just go straight to the point, and I don't need to be teaching, I'm just using this avenue to teach you guys so that you can always carry out technical analysis yourself. All right. So this is the low and this is the high. All right. Price action took off from here like this. It created a low. You push, created another low. You push, created a high, and it's coming down. So now that it's here, what do you think? Price, once it finds a support, once it finds a support, it should move to the upside. Yeah, that is the other flow. It should break. You can see this is a break of structure. Break of structure. All right. This is another break of structure. So we should be expecting another break of structure. Why? Because this guy here has already given us a high. Then this is a pullback. This guy gave us a high, a pullback, gave us a high, pullback, gave us a high, pullback. We should be expecting a high, right? If this guy continues to push to the downside, taking out this low, that means we should, because this will not happen because this guy has done his job. It's a strong low. He has done his job. So price has no business violating this level. This is what we call strong. It's a strong low. Why is it a strong low? Because he has done his job. He created a high. He took out this high. This low took out this high and he created another high. This low created a high, all right? And from the starting here, this is not a structure here. A structure happened when this created a high pullback. After this break of structure, we now say, okay, a push to the upside, a bullish trend has now been established. We're on a bearish trend from here to this point. Now, what happened? Change of character happens here. It created a high. Why? This was the last break of structure. Let me make you guys understand so that you flow. If you're not getting it, you have to watch this video like 2-3 times. I did it in the past. Anything I don't understand, I will continue to watch until I understand. And then the good part is that the more time you watch it, you must get new things. All right. This was the last break of structure from this push to the downside. Then this point here was where we had the market shift. Market shift. And what is that market shift? The bearish trend has now turned to a bullish trend. That is why we call it market shift, or like some will call it change of character. It has changed from a bearish trend, now bullish trend. All right. I'm showing you guys, this is where the whole thing changed. Once from here, it created a high. It does not mean that when price action creates a high like this, you know, oh, it's bullish. No, it has to be pulled back because this pullback can equally pull below this level. Then this one will now just be flip zone. Okay. Now it created this high. Watch for a pullback to happen. And that pullback is not supposed to pull back below 61, 61% or 78%. It's not supposed to pull back below it. At most, it will get to 100%. If it breaks below 100%, if your body breaks 100%, that means it has violated this level. So you can now see that a pullback stop at 60% and 61%, then it's going. If you mention this one now, bring out your fib like this, this is the high. What happened? It broke below 61.8%, just the same thing here, all right? Then it started going up. Now, where are we now? If you look at this other side, this last one, this is how to even apply confluences, all right? For you to be sure that you know what you are doing. Price has pulled back. This was a deep retracement. It has what? Pulled back to, price has retraced up to 78.60%. You see? And there is what? A rejection here. So a rejection here is not forbidden. It can push to this level, but it cannot body breaks this level. Once it body breaks this level, just know that another thing is about to happen. All right? So at this point here, we are still very, very optimistic that price should turn from here. And where will you target? Target this high. You don't need to struggle. Target this high. Your TP should be here. All right? Your TP should be here. When market or when market opens now, after like 1 hour, then you can now take position. Just watch, see the reaction from here before you jump in. You don't just jump in. Now, yes, there's a rejection. It's clear. But you need to see a bullish candle. Once that bullish candle closes and another one opens that gap above, or if it is a bullish engulfing candle, then you can now enter and ride the trend up to this level. But meanwhile, as it's going, it's supposed to create another high. All right? It's supposed to create another high. But for you not to be praying when you see price going to your direction, simply set your take profit order at this reversal point 000 here. As simple as that. So as far as Aussie is concerned, that is gold USD, we are going to be bullish. We are still bullish because what you saw that Thursday and Friday was just a pullback, a deep retracement. All right, and the retracement is giving us sign that it has ended. Why? Because there's a rejection here at this level. If you put your Fibonacci retracement tool for another confluences, all right, you notice that where price is at is exactly 78.60. And apart from that, you see why price actually even went deep up to this point, because there was a little what do you call it, fair value gap here that price came to close up. All right, so as it stands, if you are the type that enters your trade, you take your trade 1 hour, 15 minutes, 30 minutes, all you need to do, you already know the direction of the higher time frame. So you just go scale down. You scale down. Now let's go down to 3 hours. You see, it has already started. Look at, you see? Look at. All right. You see this candle, this with on 3 hours, this candle we come down, then we will see another bullish candle. All right, we see another bullish candle. Don't just at this point you just jump in. No. After this candle close, we see another candle stick that will open. Then you can now enter the trade. But as far as I'm concerned, we are bullish. There is a sign that we are bullish already. So you look at it. Then if you go to 1 hour, you see this push, it needs to come down, then break structure to the upside. Then it will now started going up. This 1 hour. So this is how you do it. If enter your trade on 1 hour, you scale down. This is where you enter your stop loss below this level. All right, below this level. As simple as that. If you want to enter, if you take your trade on 30 minutes, this is your trade. You see, if it's 15 minutes, look at it. All right, you just wait for price action to clear this high. Let it give us change of character on the lower time frame. And as you know, anything that happens on the lower time frame, it will first of all happens on the lower time frame first before it happens on the higher time frame. If you're a type that takes trade from 5 minutes, all these ones are too noisy. You wait for price action, all right? As it is, look, it has already changed character here. And when it pull back, it's supposed to pull back to this level, to go and retest this level, then you now start going up. So that is how it is, guys. I've showed you everything you need to know, how you need to place your trade. Make sure your stop loss below structure. That is all. Stop loss below structure. Now that you can see that it's turning, you just need to give just little stop loss, and by the time you see that it's going to your direction, you just take your stop loss, put it on the, like how I manage my my trade. I'll just carry my stop loss and put it I'll put it exactly where I put my entry. So I'm not risking anything. But before you do that, you must allow it to move away first for you to be sure. So as far as I'm concerned, we are bullish. And as soon as market opens, we just see it's going to be a very smooth ride to this point. So thank you so much, you guys. As far as gold USD is concerned, we are bullish. So let's take another pairs, which is Euro USD. Euro USD. One thing I like about Euro USD is that it gives a pattern, then it push. It gives a pattern and push. So this one is very simple to trade. So if you are looking for one of the best pairs to trade is Euro USD, and the spread is very, very minimal. You understand, because of the volume. It's one of the highest pairs that is traded in as far as forex is concerned. So you can see that we've been bullish all along. We've been bullish. All right. Look at it. We've been bullish. We've been bullish. So that is established. And where we currently at is that price created a falling wedge. And we all know that the falling wedge is what? A bullish continuation. So price action created this push, it created a high falling wedge. Now it pushed to the upside, and now at this point, you discover that this guy here, the push supposed to go and clear this high. So if you scale down to, let me clear all those things so that everything will just be fresh. So this was the break of structure here, all right? Break of structure, all right? And price created a high. This is the obvious break of structure, obvious one, all right? All these ones are small, 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 is okay, but obvious ones, and when there is a major push, just know that price will come back to retest that level. And that is exactly what price did here. You see, it came back. The pullback came, it cleared all those ones, all these ones, small, small ones. Use all those POIs, small, small POIs. Use them as a liquidity to come down here, retest, and we can now see from here, price action is what? Gathering momentum and is going up. So this is the current trend that we need to analyze so that we can look for an opportunity here. So we scale to 15 and 3 hours. We still see all these ones. Then what do we need to do? This is a falling wedge. All right. And a falling wedge is what? It's a sign of what? Bullish continuation. So he has given us a pattern telling us that, okay, he's still ready to push to the upside. So it is a falling wedge. After this break of structure, after this last break of structure, he gave us a falling wedge. All right, he gave us a falling wedge. So once, as you see, a price came here, price action came here, it came to interact with this level. This level. All right, this is what a support, this is a resistance, this is a resistance. Now it came back to retest, and you can see a very sharp rejection that I got here. A very sharp rejection from here. All right, a very sharp rejection. And if you want to measure it now, let's say measure the whole, let's use another confluence, measure the whole string, we discover that it will get to 38.20. All right? It got a rejection from obvious level, 38.20. All right? If you don't know how to read, if you don't know the meaning of all these levels, Fibonacci levels, please go and look for my videos, go on my YouTube channel where I explain everything. All right? From 50% above is what? A premium level on a bullish trend. From 50% below is a discount level on a bullish trend. So if you want to, let's say for example, you want to mention this level from here to this point, you see, price actually pull below this 50%. So it's at a discount level. Testing this level, because why? There is an AVG here. It can close this gap. All right, now it's going up. Okay, so what price did was to pull back to a discount level before it will now rise. So if it is a bearish trend after a swing low, you wait for after a swing low. What do we mean by swing low? Price pushing to the downside. After a swing low, price is supposed to go above the 50%. You look at you, can you see? This is the swing low. You see? Price will retrace back to where? Into premium level. Above 50 is premium. When you turn the chart around, this thing around, the fib, that means you measure from this 100% to this swing low, all right? The swing low, put your 0.0 here, all right? Then you drag the Fibonacci retracement to, you wait for a retracement. The retracement after this rejection, the retracement, you see, it pushed to the upside. It created a rising wedge. That means it's a bearish continuation. Created a rising wedge. Look at it. Created a rising wedge is going to drop. So price will pull back into a premium level before it sells. So that is just how it works. There's no magic, and you just have to take it simple the way it is. It's as simple as that. Now that we have been able to identify that there is a pattern here, there is a falling wedge, then we should know that it's going to break out of this channel. Once it breaks out of this channel, it's going to come back, then before it will move, all right? Before it will push to the upside. So as far as I'm concerned, if you are the type that takes your trade 1 hour, 2 hours, 30 minutes, 15 minutes, 5 minutes, 3 minutes, 1 minute, all you need to do, we have given you the analysis already. This is the leg we are trading. Then where is the opportunity? This is where the opportunity is. This one here. This is the opportunity here. So this is a falling wedge. The falling wedge is a bullish continuation. So once market opens, then as this little pullback once it's done, then there will be a bullish candle. Then I will be pointing up because there's already a rejection here, and here is what a resistance level that now turned to become a support level. And when you look at, if you plot from down where this push originated from up to this level, it found support at 38.20. Another confluence, about 3 confluences now. That is to tell you price is going to come as it is going to go up. You are going to go up. It's rising. So we are bullish as well. Bullish as well, guys. So that is that for Euro USD. It's not difficult. Once you see a pattern like this, you just know that it's going to go bullish. Then the next is USD JPY. USD JPY, let's man, almost an hour. USD JPY. There's something very significant here that we should first notice. We have our what? Support level here. All right. So once you see something like that, you quickly mark it because it's it's relevant. is relevant. This is support level. The support level, then we have a resistance level here. So when you have eyes, now one thing about trading is that you need to train your eyes up as the first thing. You need to train your eyes very well. This support and here is a resistance. Why is it resistance? It's resistance because price as soon as tested this place, it drops. Tested this place, it drops. Tested this place, and it drops again. All right. So now what we need to do is we can see that price is just hovering around this point here after this push to the downside. All right. Now all we need to do here is that we scale down so that we can know what we are doing. All right, so that let's know what we are doing. We don't need to go far. So if we have to analyze a leg, we take this leg, all right? We take this leg to analyze. Why do we need to take this leg? You can see from the higher time frame point of view, this is a break of structure, a clearly break of structure. You know, one thing you should understand is that, guys, the higher time frame is the Google map of trading. Forget about what happens on the lower time frame. Lower time frame is too noisy. But at the end of the day, the lower time frame will still come to align. After all those wahala, bars, you will still now come align with the higher time frame before you see a significant push. But that does not mean there are no opportunities on the lower time frame. There are opportunities on the lower time frame, but you'll be seeing boost, too much noise. I'm telling you guys, if you have just started trading, yes, you might not have the patience to go on to higher time frame to trade, but it's the best. Should you take your trade on a higher time frame? No. Use your higher time frame just like as we are doing top-down analysis to know the direction of the trend, as we know that is bullish. All right, but it's finding it difficult to go above this level, to break this level, which is the resistance level. This is a support level. This is a resistance level which we have marked on the higher time frame. You can see resistance. There's a resistance here that price is battling with. It got here, it dropped. It push again, it drop here. This point here, you can now see it now did it change character here, and you can see internally here on the lower time frame, it now started breaking structure up, breaking structure up. You look at this point, look at it here. Break structure here, break structure here. But let's follow the main leg. Now, at this point here, now we'll not okay. Now that we have been able to identify this leg that we are supposed to play, this is the leg we are now, from here we'll look for an opportunity, guys, an opportunity. So if we scale down to 3, we discover that something is happening here. All right, something is happening right here. You discover that something is happening right here. All right, after this break of structure to the upside, price created a low. Then you now saw that price gave us an internal market shift, internal structure shift. There's an internal structure shift here, all right? internal structure shift here, price came back to retest this level. This one is break of structure. This is how you analyze and you now know where you stand, where you will now stay and wait for price to come to you. Then if you look at this point here, all right, you see price came back to retest. Did it break this level? No, it did not break this level. It only came back to retest this point. All right, after I get to this point, you retested. Now it's going again. All right, you see internally here, you see change of character happens here. There is market shift happens here. This pullback has given us a market shift here. All right, has given us a market shift here. So it went up, it pulled down, it breaks structure to the upside. You might not even see it. You might not see it, but if you scale down, you will understand. Scale down to 1 hour, you can now see that price action after this market shift right here, there is a break of structure here, no matter how small it is, and it's very significant. Why is it significant? It's significant because he even created a fair value gap here. A fair value gap here. You see, there's a fair value gap here. This one. From this level to this level, this is what? Fair value gap, FVG. You see? There was a volume here before I get to this point. And what are you seeing here, guys? Before now, you did not see anything, but now I've opened your eyes. We can now see a falling wedge, a falling flag, rather. You see? Like this, it came down, then it needs to push. All right? It can even come down again because, okay, once you look at it, you discover that it has interacted with this level, this level. So this is the level that is pushing it back to the upside. And if you look at it, it's also a level that is significant. And when you take your fib again, take your fib as to for another confluences, don't forget this is what broke the structure to the upside. So this is a strong low. This is a strong low. This very point here. This is a strong low. We are breaking it down for you guys to understand. If left for me alone, if I want to do my top-down analysis, it will not even take me 10 minutes. I'm telling you. This is a strong low. Why? Because it broke structure to the upside. It broke structure. It took out this high. Now, after this break of structure to the upside, now there is a falling flag here. A falling flag. This falling flag is what? A bullish continuation. It's telling us that this push, as it's retracing, there will be another push. All right? So we are expecting price. If you enter from here now, once market opens, where you should be targeting, you should target this high here, because there is a significant This point is still very strong until price action is able to break above this level. But because it's a turning point, even if price action will break above this place, there will be a reaction here. It cannot just come and break this point. You still have two, you see, 2 to 1 here. Almost two to 1, almost 3 said. So almost 3 are. But what you need to do as a smart trader, your target is this level. First, take your profit here. All right, take your profit here. You take your profit here. Target is high. Take your profit here. But me, usually what I do, I put my target where price. You see, this point here is the price. This very point. So I will gladly put this thing here. All right. This is my take profit target here. Enters here. Then a little below this level, this channel. Then that's all. Wait, when you do it like this, you get like almost 4 hours. So this is how it is, guys. This is how to trade. Put it below, a little below the wedge. All right. So we are bullish on USD JPY. We are bullish. We are bullish. All right. We are bullish. Even though this push, we get here and drop, this is where you should take your profit, because why there is a significant level here that is a resistance. That was why we were able to, first we singled it out first. That was the first thing we did by identifying this level, resistance A, and the support level. So this is the opportunity. As soon as market opens, this is the opportunity. This is the first opportunity before you take. Once it breaks above this level, it has opened, then we just continue to buy. But once it gets here and you see that it will give you a rejection, and you see that it's going to go down from here, you change your bias immediately. That is how it is. Once you enter, do you just jump in? No, you wait for price to pull back from here, wait for price to come down, then it will pull back. But this pulling back will not take out this high again. Then you just enter. That is the reason you need to learn how to use fib. Once you create something like this and it's pulling back, you bring your fib, you know that, okay, from this 50 up above, you'll be waiting for price. But that does not mean that price action will not stop at 38.20, because that 38.20 is a support level. It's a resistance level, sorry. It's a resistance level, because we are talking of a bearish trend now. If it's coming down, it's a resistance level. Once it gets a found resistance, it's going to move. But always wait for this price to pull back into a premium level. So once it gets there and it finds a resistance, and you see that it's pulling back, don't jump in. Wait for price to come back. Let it, once it push to the downside, wait for a retracement. Once there's a retracement, and you now discover the retracement did not take out this high, you just know that, okay, now it still wants to go down. That is why you need to learn how to use your Fibonacci retracement tool. Go to my YouTube channel, Against FX. Just type Against FX. You subscribe and you will see a lot of videos that you watch there, free of charge. Once that is done, you just plot your listing here and wait for price to come into this level. Once it comes into this level, You wait for a rejection. As it's coming down, you enter. All right? It's like that. It's as simple as that. So that is that for UJ. We are bullish. And this is the first opportunity. Is the first opportunity. All right? That is the first opportunity, guys. That is the first opportunity. Then the next one is US 30. Should you trade all? Don't trade everything. One pair is okay, at most two, I tell you, for you to be able to concentrate. For you to be able to concentrate, just concentrate on one pair or two, at most two. Okay. At this point, we now know that, okay, we are bullish. Why? Even on the, okay, we are bullish, but there's one thing that is obvious here. This point here, a resistance. There's a resistance here, an obvious resistance here. We need to single it. We need to single it out, and an obvious support here. There's an obvious support here as well. There's an obvious support here. So we need to, now that we have identified this, like, because price got a drop like this, it came down, broke below this support, but it came again, climbed it, then it retested it. All right. Then it has been going up, and look at it, it gets here, it drops, it's here again. So we don't know whether it will be able, there's this possibility of breaking through, but all we need to do is now we need to single out a point where we need to investigate, or rather analyze. All right. There's a point we need to analyze. Let's not use the word investigate here. We need to analyze this point and now look for an opportunity as to where we can take advantage. So that is the last break of structure before this level. So we scale down to this point we marked, so that we understand. Okay. You can see after this break of structure, price has been dangling from here, and it created another level here. Created another level here that that is also significant, that we must also take a good look at. There's also a level here. All right, there's also a level here, a support level, because the other one is far below, but there's a support, another support level here. But this is a POI, price came to this level, and it rejected from here. So now, this rejection here, we can now see that there's what we call market shift that happened from here. Market shift happened here. When we say market shift, we are simply saying that after a bullish or a bearish run, the price, let's say, for example, on this one now, this bearish run, This is a bearish run to this point. Now price is rising again. All right. Now this was the last resistance, and price has successfully cleared this resistance to the upside. So when that happens, is what we refer to as change of character or a market shift. All right. So at this point, you will now notice that after this break of structure here, after this break of structure here, after the break of structure here, you will see that price action created what? What, guys? Drop it at the comment section if you know what this is all about. This very one here. This thing you see. After the break of structure, what is here? What is this one, guys? Drop it at the comment section. Let me know if you guys have been following. What is this, guys? So if you scale down to 3 minutes to 3 hours, you will now start seeing it more clearly. All right. You'll be seeing it more. It's more clearer, rather. Okay. After this last break of structure, you see price touched this resistance level, then it's giving us a falling wedge. Oh man. You see? Go to 1 hour, you cannot see. So at this point, you now see that it has even broken out of the channel. Then what we need to now see is what? Whether price will come back, retest this channel, then we'll push to the upside. All right? Whether price will come back to retest this channel, but is very tricky here. Why? Because there's a resistance here, a resistance that is obvious. All right? So wait, when price pull back to this channel, into this channel, retest the channel, all right? Then let's see if there's a volume that will break up, that will break this place, break this resistance level. We just know that, okay, we are up. So that is just it. Wait for price to pull back, then whether we'll be able to break this level. Otherwise, if we are not able to break this resistance level and you see price coming down, wait for it to clear this level down, then retest before you enter. So that is how it is. And if you want to further trace your point, put your fib like this. Where did it get to? 50%. Look at it. 50%, it found support here, 50%, which is very, very accurate. And it found a support here, and you see a rejection. So that is how to trade. Literally, there's no any other thing. It's as simple as this. Just for you to be very detailed and thorough in your analysis. At this point, I will now say, oh, you must jump in 100%. No, because there's an obstacle here. Who told you that as this obstacle that is here now? Why is it obstacle? It's obstacle because a lot of sellers are here waiting for price to get here so that they will push the price down. Why? Because price got here, they push it down, they get here again. Price try to break, they push the price down again. It got here again, they return the price. Now he has given us a pattern telling us, okay, it's supposed to rise. So we are not 100% sure. A pattern can also fail. So you wait until this price pull back, you see the momentum. If it's able to break above, then you join the trend. If it breaks this level, it's going to even come back to retest this level because the level is very, very significant. All right, so you have to be very careful around here. That is the point. Be careful around here. If you trade US 30, be careful around here. Honestly, that is the truth. So, as far as I'm concerned, this is the analysis. If you trade US 30, just be very patient. Be very patient. Let price. I will even suggest let price either break above or it return from here before you enter. If it returns, if price should return, bounce from here, it's going to come down to this level. All right, then you sell to this level. If it breaks above, wait for it to return and retest the level. Then you can now buy. So here it needs patience. Around here, you need patience. If you trade USD and US 30, you need to be very patient here. But in all honesty, this is a bullish continuation pattern. That is the truth. I stand to be corrected. This is what? A bullish continuation pattern. So that is that. But you need to be very careful because one thing about trading is that protect your capital first. Any other thing can wait, but your capital, you must protect it first. Because if you lose your capital, you are out of business. That's the justice. So the next pair is Euro GBP USD. That is GU. So this has been a bullish run and bullish run. Okay. It's been bullish, so there's no doubt. One thing that is significant here is that I can see that this point suddenly becomes a resistance point. So we will have to single it out. Support, sorry. So if you trade GU, you need to know that this is a resistance point. I'm saying resistance. This is a support level, but it's a resistance level that now becomes support level. So where did the whole movement started from is here. All right? Here. That we should know. And also this point. All right? All right. So we need to, here, the resistance now turn to support. So it's very, very significant. So we scale down to 4 hours. Why we are doing all those things so that we single out an area where we can actually grab an opportunity for us to find an entry. This is how to enter a trade. There's no big deal. All right. So we can now see that, I told you guys, you need to train your eyes. train your eyes. You must train your eyes as a trader. You see, once immediately you open a chart, you look at a level where you are going to really, first of all, you need to highlight a certain level. Just like right now here is a significant level here. It's a significant level. Why? Price got here, it drops. It got here, it drops. It got here again, it drops. Like this. Finally, it broke, it was able to break above it. Then it came back, it respected the place, came down, respected the place the second time, came down like this, before it now finally broke it. You can see the struggle even before he was able to break that level. Now he pushed back to this same level, came back to retest this level. He now came here again, and this is where we stopped. So if you are doing your analysis like this, why will you be making mistakes? All right? You can't make mistake. Even if you want to make mistake, it should be a mistake that is reasonable, not just foolish mistake. So at this point now, this is what? This is a resistance. It's resistance. And it's an obvious resistance too. Very important place. Because price has tested, drop, and again, when he broke, finally broke above it, he came back. He struggled before he even pushed to the downside again to retest this same level support. Then when he went back, he retested this resistance again, came back to this support. Now, where do you think price will now go again? That is the point. Now, all we need to do is that price is here. All right? Price is here right now. It's here. So we scale down. Let's now see what is going on. You see? Let's see. When price action got here, all right, it gave us a change of character. It gave us a change of character. Price move, breaks like this, but when it got here, it pushed the price back. But did the price action broke this level? No, it did not break the level. Now, all we need to do is, let's scale down again to 1 hour, even if it's 2 hours, you see, we can see that price action, something is going on here. If you bring our fib like this, measure it to this high, to this resistance level, is still resting between 61.8, which is a golden ratio, and 78.60, which is what? A resistance, a support level, where price is supposed to turn, all right? So price is testing this level, all right? It's testing this level. And if you look at it here, this is a support level. This is support level, a resistance level, support level. So at this point, if you mark this, you discover that it's right here. All right? This is what caused break of structure to the upside. This very one here, from here. There was a break of structure for here. What caused the break of structure? This guy here. So it's a strong blow. A strong blow that broke a structure to the upside. All these ones did not break any structure. All right? It's just a market shift that happens here. Market shift happens here. This is the only leg that broke structure to the upside. All right? It broke structure, then it broke another structure, see, to the upside. It now got here before it drops. It came back and is holding around here. Price is holding here. You can see. All right? So at this point now, what do we need to do? We need to watch very well to see, to be very, very sure that this price will hold here. Once we, like as we are seeing a hesitation here, once it starts pushing to the upside, be rest assured that it's going to get to this point. So our very first opportunity is this. This one, you have to push it below this a little, all right? Because this is a leg, this is strong, this is strong low. There is strong low that caused the break of structure to the upside. All right. So we put it a little below it, then target this high. Why? Because there's a resistance here. There's a resistance here. All right. There's a resistance here. So once price push from here, if he rejects from here, just be rest assured that it's going to get to this point. All right, it's going to get to this point. Because this is a resistance and we have support here. All right, a support, a resistance. So price will get here, struggled a little. If at the end of the day, it was able to break above, let's wait for pullback. After you have taken your profit here, let price move, break this level, come back to retest this level. Then once you see a hesitation, then you join and start to push the price to the upside. But before you pull your trigger, ensure you have to hold on very well. Make sure this push, this rejection, make sure this level holds this price. All right? Make sure this level holds this price first before you click buy. Because price can decide from this point here, break this level down. It can break this level down. Yes, that is trading for you. It can break this leg down. Yes, you never can tell. But as far as structure is concerned, this level should hold. Why? Because this guy here broke structure to the upside. He has done his job. He created a high. All right? He created a high. So it's a strong low. So until price breaks below this level, once it breaks below this level, we know that it's going to continue. If it breaks below, it will come back. If it breaks below, all right, if it breaks below, it's going to come back to retest this level, then you join to push to the downside. But if this point should hold, just enter and push to the market, the push price to the upside. So this is the opportunity that is available here, okay, on GBP USD. All right, GBP USD. So as far as I'm concerned, we are bullish. We are bullish. All right. So thank you so very much. And I hope to see you guys next week, Sunday, so that we can do a technical review ahead of the week together. So on this note, I say thank you so much, and I wish you guys a blessed week ahead. Remember, always protect your capital. That is the first thing. How do you do that? By using proper risk management. Proper risk management. All right? By using proper risk management. On this note, I say thank you guys, and I wish you all the best. God bless you. Subscribe to my channel if you have not subscribed. Please subscribe to my channel. Thank you.